really there's just a handful of what we call bond programs or zero down programs. And what these are, there's local programs, there's state programs, and there's national programs. Okay, local are like HIPAA and HIP. They're programs put on by the city where basically they grant you funds to pay for your down payment under an FHA loan. The city programs are some of the worst. They take forever. The appraisers that go out there and the inspectors that go out there are real picky, real particular. We have one deal right now with Claudia. I think it's a HAP program. And the deal's falling apart because the inspector for the city went out there and picked the place apart. I mean, you can only really do it for properties between 100 and maybe 180,000, and those properties need a lot of work. And so it's a real challenge for people to do it. But that's one program. You have TSHAC, which is a state-run program where basically the funds are granted and you don't have to pay a down payment on a FHA loan. Some of the requirements are you can't make too much money. I think about $80,000 a year household income is the most that you can make. Your credit score has to be around a 640 to 660, and your debt to income has to be super low. Like you can't have a lot of debts. So first of all, you can't make a whole lot of money, and then you can't have a whole lot of debts, and your credit score has to be fairly high. Okay, but TSHAC is a great opportunity. Some of the national programs are like Seth Gold Star, and like USDA. And those are better. Some of the limits are a little bit more attractive in terms of your debt to income ratio isn't quite as bad. Usually though, still your household income can't be over $85,000 and $90,000. I believe USDA is much higher than that, but USDA you have to be outside city limits. You can't be inside city limits. So a lot of people, hey, I don't mind living, out in the country a little bit or outside 1604. USDA is a great option for them. USDA isn't granted fund, it's a 100% loan. It's a loan for 100% of the property value, okay? And it's a program by the U.S. Department of Agriculture to actually try to get people out there to buy in areas that are lesser developed. You think USDA, you think steaks and meat and stuff like that, but they have a great loan program. So ultimately, I think like for the average person, when you have some knowledge about these programs, you can remove that objection or that barrier of, I don't have a down payment, which is probably going to be one of the most common objections you're going to get with a person that is renting, maybe makes decent money but can't save up their money, which is very, very common here in the U.S. And so by understanding what these programs do, which they're either 100% loan or they're funds that are granted to cover the down payment on an FHA loan, or sometimes it's a double loan. You get two loans that roll back into one. Basically, they don't need a down payment. So you can say with confidence, for less money than it would cost you to pay rent next month, you can have a home of your own. And you won't pay your first mortgage payment for about 60 days, so you'll live there for free for 2 months. And when you do make your payment, it's going to be lower than what you're paying in rent for a nicer place. That's 100% fact truth. Okay? Well, most people, when they hear that, they're going to be like, I don't believe it. How is that possible? How for less money than I'm going to pay in rent next month, I can actually have my own place and live there for free for 2 months, and then when I'm making my payment, have a nicer place than what I'm renting now for the same amount or less in rent. How is that possible? And so I just told you guys the local, the state, and the national programs. Okay? Now that usually is effective in getting people through the door. Now, once we sit them down and we find out, okay, we have a ton of, obstacles in our way. Maybe they have a ton of debts, a bunch of car payments, furniture payments, cons, etc. And their debt to income ratio is way too high. They have to pay off a car. They have to pay off all this other stuff before they can get it. Or maybe it's a situation to where we have to do some credit repair, And for some people, it may make sense just to pay the down payment so they can get an FHA loan. We'll talk about VA briefly. I mean, you guys know, we've talked about this in class, like if you get a veteran, whether it's active duty or a retired veteran, and they have VA benefits and they haven't used them in the past, it is hands down the best loan out there. It's a zero down loan with no mortgage insurance. And so a veteran can get a $200,000 house here in the state of Texas, paying property taxes, paying insurance, and interest rates as low as they are for like $1,200 a month. A $200,000 house for a veteran is like $1,150 to $12,000 a month, and that's after taxes, after everything. For the average person, a $200,000 house is going to be like a $1,500 or $1,600 or $1,700 a month payment for a person that's putting 3.5% down on an FHA loan. So that's why it's so important with veterans. Once you get veterans on the phone, like, you have got to get into our office and talk to us about using those VA benefits. It's probably one of the best things, if not the best thing, that your military service provided you with. And so you almost get a little passionate about it in helping these people utilize these benefits, because most of them don't know how to utilize them, or maybe they haven't been instructed or educated in how to use them, and so we have to do that. The downside about the VA program, it's like anything else with the Department of Veterans. They're very slow moving over there. Right now, appraisals are taking forever. It's hard to get anybody on the phone over there. I mean, it's kind of like the post office, things go slow when you're dealing with the government or government branches. But overall, it's worth the wait. If you're a veteran, you've got to take advantage of that program. So honestly, like, having a strong knowledge of the loan programs out there is your best way to convert business. Because you can have great conversations, but people still like, no, I'm just not ready. I'm just, I don't have the money. Or, my credit is terrible, And you can have those conversations over and over and over again, but if you don't understand, like, the different programs, and that's the part, like, people want to hear something that they haven't heard before. So, like, just telling them, oh, we can save you money, and we got the best agents, or we got this, or we got that. That's selling. And when you're selling, people don't want to be sold, So you have to really, like, dig deep enough and find out, well, how long you've been renting for? How much are you paying in rent? How long have you been at that apartment complex? Do you know for the last 5 years you spent $70,000 in rent? What would you do with $75,000 right now? That could be yours. It could be yours in the form of equity and savings. And so it's important to understand these things, especially on the mortgage side of things. I mean, the bond programs, USDA, SETH, TSHAC, Gold Star, HAPA, HIP, all those programs are great to get people in the door, and then it may take some educating, and they may actually end up going a different route. Now, we may get them through that process, but a lot of things have to fit in the box for those programs to work. But you want to give people, real information there. I mean, you want to educate people on that. Because a lot of people think, I would, anybody that is renting right now that has never owned before, which is a huge chunk of the people that we're speaking to, simply just don't know that they can get a program like that. They simply just don't think it's possible. I can't tell you how many times I've heard people say, oh, well, I'm trying to save up 20%. I know I'm going to need at least $20,000 to get this house. And I asked them, I was like, well, who told you that? Or why do you think that? Because that's not true. That's simply, you fight. It's a fear too. Like, people have all these fears, fear of commitment, fear of failure, fear of, I'm going to get rejected, all these fears. And so they use these imaginary boundaries to keep them fearful. Well, how do you fight fear? Knowledge. You fight fear with facts. And so if you understand these facts about these mortgage programs, you eliminate and dissolve that fear. People are willing to take that chance. Okay, you know what, man, I think I will come in with you because nobody's really told me about that program before. And a lot of the lenders, even some of the more productive lenders out there, stay away from these programs because they're a lot of work. They're a pain in the butt. Like, they don't want to do them. But we're different in that because, like, we want to help everybody. We don't just want to help the guy that has a 780 credit score and 100K in the bank. We'll help that guy. We love helping that guy. But I want to help the person that, has just enough money to pay their rent next month and has zero in the bank. That's the person I'm more passionate about helping, because at some point, if I'm effective in getting that person into a house, they're going to save money for their future, for their family, for their kids. The guy with the 780 credit score and 100K in the bank is already doing all right for himself. He's made some good decisions in his life. And I'm real happy for him. We're going to help him make better decisions, but I'm more passionate about helping the person that's buying their first home. That young lady that came in the other day, 22 years old, buying her first house, wants to buy her house, knows that she's tired of paying $1,200 a month in rent, but doesn't know how to do it. That I get really passionate about, you know? So you got to understand these loan programs. You got to understand what they do, how they work, you know, what the qualifying requirements are, the pros and cons of each of them. And, you know, that's going to help you convert the business. One of my mentors taught me that years ago. He says having a deep understanding and knowledge of the different loan programs out there is how you will convert the majority of your business.